Good afternoon and welcome to this week's edition of Halftime Talk. I'm delighted that we can go to Washington, D.C. this week, the center of the universe, all weeks of the year, and most notably in this particular window of time. And we're joined by Tim Callen, the visiting fellow of the Arab Gulf States in Washington Institute, which has a particular focus, hence the name on the tin. It does that very important analysis on the nexus between the Washington full dimensions of the global capital, if you like, and what it all means for intersecting with the Arabian Gulf where we sit here. So thank you, Tim, so much for joining us.
Thank you very much, Sean, for having me. Looking forward to our little chat this morning in Washington, afternoon or evening in the Gulf.
Absolutely. Well, there's only one place to start, inevitably, Tim, and that is the U.S. election result and the election of Donald Trump to win the presidency and return to the presidency, the only time in our lifetime that a president has skipped a term and has come back victorious. I think it's possibly the only time that somebody's attempted to do it, never mind actually do it, but even attempt to do it. I don't recall it being done before. And nonetheless, it certainly hasn't been successful. So the question ultimately is, we know what Trump won was with relation to its relevance and impact on the Middle East and the Gulf, because obviously we lived through it. My question will be, how's Trump's approach this time? Is there signaling that may tell us what we can expect as we read the tea leaves of a second Trump presidency and its relevance and impact for the Middle East and particularly the Arabian Gulf?
Yeah. No, it's a great question, and clearly the question of the moment. I mean, I think if I was contrasting to the previous time, I would say that I think there's a general view that maybe Mr. Trump was constrained somewhat in his first term by having a lot of Washington insiders around him and in his cabinet. I think this time there's probably more of a view that is going to be people who are more outside the establishment and will probably help him implement really the policies he's been advocating in a more aggressive way. And I think as well, it looks like, although we don't have final results for the House yet, but it looks like the Republicans will probably have a clean sweep of the Senate, the House, and the presidency. So, I think before the election, we weren't sure whether many of the policies would maybe get through the full legislature in the US. It now looks like what the president wants, or president-elect wants to push, should get through. So, my own view is that we will probably see much more of an attempt to push the policies that he has been advocating for in the campaign than maybe we did in the 2016 first term of Trump.
Now, that's very domestic, is it? Or is there an international version of that to-do list?
Well, I think there is both a domestic and an international to-do list. I think the international to-do list is maybe less clear in the clearly he's made a number of big claims in terms of being able to end the wars in Ukraine, Russia, Ukraine, in the Middle East very quickly. I think that's probably unlikely to happen, but as quickly as he's been letting on. But I think there will be also those pushes on on the diplomacy side. but also other factors as well, right? I mean, like, many of the US policies, they may be domestic policies, but given the position of the US in the global economy, in the global oil market, what happens in the US is critically important for countries everywhere in the world because of the impact on energy markets, financial markets, trade markets. And if we take the example of tariffs, clearly the election campaign has featured some very strong tariff messages from the president-elect. Whether those are setting out negotiating positions or whether they really are intending to do those, this will create significant changes, I think, in the global trading system.
Does that mean that their multilateral agencies, the multilateral framework that has essentially guided the global economy for 50 years, that's a post-Bretton Woods, that architecture itself could be up for reconsideration, defunded? How vast of a multilateral sort of question mark are we dealing with here? I mean, is the United
Yeah.
Nations itself even a possible question mark? We see he's just today appointed Elise Stefanik, the very, very robust congresswoman from New York, who was, I think, single-handedly responsible for nearly removing all of the presidents of, well, a number of presidents from the Ivy League universities over the last year.
I mean, I'm going to stick to the economic side rather than, I
Yeah.
think, delving into the politics. And the functioning of the United Nations is not one of my specialities. But let's say on the trade side, I mean, I think we've already seen clearly a reasonably significant fragmentation of the global economy in the lot. Well, basically since the global financial crisis, right? We've already seen increasing tariffs from the US, Europe, particularly on Chinese products, but more generally, we've seen this sort of, almost, move to a two-polar system around the US and the West on one side, China, Russia on the other side. I think with the tariffs that Trump is talking about, we're going to see, that go further. Right, we'll see probably.
But when you say go further, are we talking about within the rules book of the World Trade Organization or
Well, I mean, I
something
think we're already
outside of
out
it?
of the rules system of the WTO with what's being done, I think, at the moment, right? Of course, there's still is the WTO. It functions in some ways, but I think that the tariffs that we've seen are already moving us away from you know the idea of promoting global trade and a free and fair rules-based system. Countries are acting unilaterally on this side, and I think the risk is clearly that with the US policies that we see that deteriorate quite quickly further. I think it'll matter whether this is an effort to bring people from Trump's side to the negotiating table, or is he really intending to do this? Because if we do see tariffs of the size he's been talking about, we're undoubtedly going to see other countries retaliate on the US. Then we have the risk of a much bigger global trade
But
war.
what, as you say,
The IMF has been. Go
this
ahead.
is not new. I mean, this is we can look in the rearview mirror here a little bit to get some evidence as to how this is going to go, because obviously Biden himself put 100% tariff on electric vehicles coming from China into the United States. Trump had his own tariffs from his first administration. So how is this going to be different? Is it just by pure scale, or how do you see what is the departure here?
I think the departure is on scale, right? If Trump implements as he was talking about on the campaign trail, with talking basically across the board tariffs, very high tariffs on China, I think, across the board would be my understanding on, on what he's talking about. That's going to inevitably lead to, lower global trade growth, questions about, um, whether other countries will retaliate on the US. I would think the answer is yes. And what that means for, trade growth going forward, which has not been great anyway. If you look back a couple of decades, we were seeing strong trade growth, pretty strong, global growth, linking that into strong growth for, oil and other commodities that were coming out of particularly China. I think we're probably into a lower growth. We're already into a lower growth scenario. The question is a trade war would probably put that into an even lower growth scenario. And then I think the link into the Gulf and elsewhere is that would be lower oil demand growth going forward, with the consequences either for their production themselves or prices if they try to hold production.
Does this bring us, I mean, looking at the oil window for a moment, and obviously I mean, there's a number of things that are quite unique, or not unique, ultimately different than where they were when Trump left office a few years ago. There's obviously two major active wars going on in the world, but you also have on the oil side a very large volume of idle oil production capacity within the OPEC plus countries, generally recognized to be about 6 million barrels a day. And we're now in a window of time, a bit like the window of time the Fed wants to cut interest rates and makes money cheaper. OPEC Plus wants to stop cutting supply and put more of it back in the market. And every time they get a few weeks away from that sort of action happening, they kick it down the road. Your thoughts on, does this change that? I mean, ultimately, do we get closer to the day, the ultimate day when finally all quotas will have to go and every band for themselves?
Well, I mean, I guess there are two ways of looking at it, right? One is, it do you get back to the scenario where, as you say, you have, everybody decides, and I guess, probably led by Saudi Arabia, that now is the time to start, opening the taps in the knowledge that, that would push prices, I think, significantly down in the current market? Or do you keep extending the OPEC plus cuts? I mean, as I look at it, it seems very unlikely to me that OPEC plus are going to be able to restore the production they're talking about into 2025. Of course, we may be shocked by strength of China or the US economy next year, but it seems in the absence of a very strong rebound in growth and filling into global oil demand growth, that we're likely to be in a position where it's very difficult for OPEC plus to put much production, if any at all, back into the market.
But we're in the, you're kind of articulating the business as usual world. We're going by the whole point of this is that, at least our discussion is that we're going into a period that is not business as usual, right? That we're talking about elevated tariffs, we're talking about much greater protectionism, nativism on the commercial and trade side. I mean, at the end of the day, OPEC plus cuts keeps about 1 million plus energy industry people employed, and Houston boardrooms making large profits on elevated prices. Is that something that Donald Trump is willing to give up?
Well, I think Saudi Arabia and OPEC plus in this area, I think, are going to make the decisions that are in their own best interests. And for them, the choice is, right, do I, keep production similar level to where it is now, hope prices stay in $70-$75 region, or do I open the production sort of spouts and knowing that prices will
Well,
go
let's look
down.
at it from the other side. What's drill, baby, drill mean in the next 4 years? And inevitably, I mean, President-elect Trump made a lot of statements as he does through the campaign, but it's been consistent for a long period of time. This idea that he can somehow open the taps of U.S. energy production and sort of flood the zone, so to speak. From a U.S. energy industry point of view, in terms of, I mean, we know what OPEC Plus is trying to do. They're trying to curtail supply to balance the market and hopefully get an elevated price somewhere 70 to 90. Uh, Donald Trump comes along and wants to flood the zone. How do those two things coexist?
Well, I think there are two things, right? If Donald Trump comes in January, 20th, and eases, regulations on drilling, it's not going to be immediately that production is going to go up, right? It'll take time for the investment. Yes, I mean the investment lag is not that long, but it's not immediate. Um, and the question is going to be also, I think, you know, it's clear that Wall Street is putting more constraints, I think, on US companies in terms of, wanting a return on capital rather than just production growth. How much further US production will go up in the next year or so, even under a Trump regime, I think is open to question. I'm sure it should go up somewhat, but how much? The other thing is, I think Trump's policies are also going to sort of reduce the demand for demand and supply for clean energy sources. So there's both going to be, I suspect, a increase in US supply to some degree, but there's probably also going to be an increase in US demand for fossil fuels under Trump. Where those two balance out, I think time will tell, but it's not
So Trump can
obvious to me.
deliver
Yeah.
with less regulation. He can deliver a lower cost barrel for U.S. oil companies, and so without increasing production, they can increase their profitability. Is that what you're indicating?
Well, I don't know whether, I mean, I think ultimately, the regulation will allow more drilling, right? Then you've got the question of, the cost of actually producing that oil from there, which, certainly the costs of US production on the whole have fallen right over a number of years, where that is now. But my sense is that, you know, you're opening up more opportunities for oil, but ultimately it's a commercial decision whether they're going to actually exploit those and how
I mean,
much they're going
ExxonMobil doesn't
to
want
exploit it.
$50 oil as much as Saudi Arabia doesn't want it.
No, that's true. And, but also they do want to increase production, right? And if you're increasing production a bit while Saudi's, happy there, keeping its production back, then they're probably going to go ahead and do that, right? I mean, it's almost like a game theory here of trying to decide
But
what
this
the
is
other
also
side is
quite
going to
different,
do.
isn't it? I mean, again, amongst the different windows, different realities and context of this Trump administration is, I mean, the idea of peak oil demand is no longer dismissed as fantasy, although OPEC Plus still has it out at 2040. Most consensus seems to be more 2030, and certainly China is the golden goose that is no longer delivering on incremental demand growth. We are in a different window here where these coexisting factors are really coming face to face for the first time, or certainly will do over these coming years.
Look, I mean, there's no doubt that the sort of the longer term outlook for oil is going to be challenging for the Gulf region, and that's one of the reasons all of them are undertaking, pretty ambitious diversification plans. You know, whether it's 2030, 2040, I think what you've alluded to is that, we're not going to see the demand, the growth in oil demand going forward that we've seen in the past. Even if, the total, global oil demand remains relatively high. It's not going to grow, and that's going to be an issue in terms of funding higher expenditures, government expenditures in the Gulf. If you don't have revenues rising, expenditures can't rise unless you're going to run bigger deficits. So, there are challenges. I think, to their credit, the Gulf countries have recognized those challenges. I think all of them, to varying degrees, are pushing in terms of the diversification away from
I mean, they
oil.
are diversifying, and clearly that is true. And even on energy, they are investing heavily into renewable and low carbon fuels. But they are also, to a man, expanding their oil production capacity quite significantly. Most notably, the UAE is knocking on the door of 5 million barrels a day and carrying the largest percentage idle capacity within the OPEC plus. Saudi Arabia have announced intentions to increase capacity as well. They pulled back on that announcement in the last year a little bit, but Kuwait and everybody's is raising that capacity and investing large amounts of money to do so.
Yeah, that's right. And I guess they're making a play on the fact that their production costs are much lower than elsewhere, right? And as they say, we'll be the last country standing on this. That's the play. We'll see, I guess, whether that works out. But with that, they are making big efforts on the diversification side. Of course, a lot of that, particularly in Saudi Arabia, is initially funded by the oil revenues they're getting, is behind the high government and public investment fund spending. So it's not like they've become less reliant on oil in this phase, but they have a clear strategy, I think, going forward on how they want to develop.
Is there anything in the is there anything in the Trump sort of economic plan, that's this sort of protectionist on steroids plan, that is of specific sort of tariff concern that we should be alert to here in the Gulf? I mean, we don't export a lot of oil to America, so sanction or tariffs on oil, where would we? I mean, some countries, I think Iraq still does, but Saudi does, but doesn't really have to, is sort of my sense of things.
I mean, I would look at it two ways, right? I think that the biggest way is probably indirect, in that if Trump tariffs affect global growth, that will affect global oil demand, which will affect the Gulf countries through the oil market. That will be one channel. The second one is, and I think it's very unclear what Trump's policy is going to be on the export of high-end computer chips, AI-related stuff, defense technology. I mean, clearly, in the previous administration, there was a lot of talk about export of defense equipment to Saudi Arabia, big deals there. Of course, it's been going on anyway. The high-end computer chips, and I think particularly concerns about whether they could end up in the hands of China, Russia, is maybe something that could be a bigger deal. To the extent that AI is clearly one of the areas Saudi, UAE particularly have their eye on, this is an area probably they will have to tread carefully in terms of relations with China, with the US, and how they manage those.
You can't do Huawei, and you can't either choose between Huawei and the American version thereof.
I mean, I think there will be choices will have to be made, I suspect, and I think given Trump's probably more transactional nature than we see in a typical president, it'll be interesting to see how this works out and how he chooses to play this.
One of the big winners, I mean, to use that word, it seems not very polite in the context of the suffering in Ukraine, but inevitably Europe has become very dependent on American US energy, particularly LNG during this period, but increasingly middle distillates as well going into the European market. If Trump, as he has indicated, is going to sort out the Ukraine conflict in 5 minutes, things returning to Ukraine structure in terms of Russian relationships with Europe and, the energy that Europe enjoyed for so long, cheap available pipeline gas, for example. I mean, how does that play out, do you think, from an American perspective? Would that send all of that export capacity that the US now has into the east of Suez markets? And so for Gulf producers, enter oil and gas, we would face a lot more competition in this Asian market?
I mean, my sense would be that even if there is a resolution of the conflict in some form between Russia and Ukraine, we're not going to be going back anytime soon to sort of previous relationships with Europe. So I just I don't see that sort of big change in the structure of the energy markets happening. I just can't see it in the foreseeable
If
future.
America does a deal with Russia, why wouldn't their NATO allies in Europe follow suit, particularly when you see a political architecture that's swinging to the right who's quite comfortable with doing business with Russia?
Because I think there is big lessons learned in terms of the reliance on Russian exports or imports from the European side from the beginning of the conflict, and I don't think
I mean,
that
of course, it's never stopped. I mean, one has to be realistic about the
yeah,
reality
no,
of things, right? There's still
that's right.
pipeline
Yeah,
gas going to Europe through Ukraine. I mean, it's
yeah,
sort of bonkers to say it out
yeah.
loud, but that's the fact. Germany's still importing LNG from Russia. None of that has stopped. So increasing it by X percent from, whatever percent it is now, it strikes me, all of these things are possible. I mean, Germany fought world wars, two of them with the rest of Europe, and they're now best buddies and partners. So
Yeah.
things change.
They do change. I just don't see in if we have an end of the conflict in Ukraine, it doesn't mean relations are going to be restored between US, Russia, Russia, Europe. I just maybe this is an area we differ on, but I just don't
Well,
see
I
this
don't know. I mean, I would
yeah,
imagine Houston has a few ideas. They might be on the phone to Trump saying, whoa, 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 don't solve this in 5 minutes, slow down. We're trying to build multi-billion dollar LNG export facilities here that we need banks to finance. We need to be able to prove we have a market. These are complicated issues. Ultimately, you don't know what your policy, what does Mike Tyson once said, until you get punched in the face. You have a plan until you get punched in the face. I mean, all of these things have a counter push. It's not a one-way street. You said it yourself earlier about the tariffs. There will be revenge tariffs or whatever the appropriate trade language is. People won't take 50% tariffs and do nothing, right?
that's right. I think it's inevitable if you put on size of tariffs and across the board, like it's being talked about here, your trading partners are going to respond.
How does the American economy respond to that? I mean, ultimately, you're talking about putting up the price of all the goods you import. It's sort of an own goal in a way, isn't it? As a economic policy.
Well, I think it depends, right, what response you get to the tariffs. Do you get, sort of over time, the onshoring onto the US of the production, that is currently being imported? I think initially, yes, right. I
That
mean,
takes
unless,
time.
and that takes time to do. And I think, prices will, inevitably go up in the near term as a result of this. And I think there are other factors, right, that are probably going to push prices up in the US in the short term. I mean, he's clearly talking about, extension of previous tax cuts and deeper tax cuts. So there's going to be a fiscal stimulus here in the US.
Another one, just what they need.
Immigration policy is going to reduce labor supply if it's enacted as is being talked about. So there are a number of factors that are, I think, in
Well, if we
the
just
short
focus
term.
as our closing comment, I mean, inevitably these are all there are obviously many unknowns, but there's great extent if you take Donald Trump at his word and what he stated, and quite often he follows through on, and particularly as you said, if he has all of the houses of Congress, what would be the most immediate thing. I mean, in terms of the first quarter next year, oil pricing, oil demand, supply. I mean, there's a lot of mid to long term consequences, the European thing we talked about and so forth. But what do you think could be the most immediate first half of next year reality that one would have to be thinking about?
I mean, I, I think the first thing is going to be I think we're going to see stronger growth and higher inflation than is currently expected in the US, because of the the fiscal position and because of tariffs. I think what that will mean is, right, the Federal Reserve will not be able to reduce interest rates to the extent it would have been able to in the absence of those policies. So you're going to see almost this sort of switch, with monetary not being able to be as loose as maybe it otherwise would have been, but fiscal policy being looser. Clearly, again, that has some impact on the Gulf countries because 5 of the 6 of them are pegged to the US dollar. The central banks, yes, they don't follow exactly the Fed, but they follow pretty closely the Fed. So probably, in the Gulf, you're going to see not necessarily higher interest rates from where they are at the moment, but I think a slower path of policy easing going forward than we would otherwise have done, and possibly interest rates actually going up if we see a big impact on inflation.
Well, that'll be a whole nother interesting thing to spectate. Will be the face-off between Jay Powell, the Fed chair, and Donald Trump. There's history there, and it'll be certainly interesting to see how if he was to start to increase rates, Trump would have his hair would explode again. Tim Callen, visiting fellow at the Arab Gulf States in Washington. Thank you so much for your time today. It's great to have the voice of the Arab Gulf States Institute in Washington with us at this very critical time, and we thank you for making that time for us.